Hello.
Yes, Chairman, we are here. We are hearing you.
Chairman.
Yes, we are live. Sir.
Yeah.
Hello, are you getting now?
Yes, yeah, we are audible and visible, sir. We can start, sir. We are live.
Thank you. Sorry, Ramesh sir, Sundararajan sir.
Good evening to all the members for joining the session on Q&A with relations to the bank audit season which we are all going through. So I welcome the chairman of SIRC, CA Chennai Talkala, and our two eminent speakers who are the panelists for today's session, CA R. Sundararajan and CA S. Ramesh, both of them from Chennai. Friends, in fact, both of them are very passionate speakers. They would definitely keep interacting with members across South India, and they passionately go across all the locations. For last 20 plus years, they've been interacting with members and addressing members on bank audit seminar. And it's a great privilege that we're able to invite them despite being in a bank audit. They pulled off time and they want to interact with our members. So thank you both the panelists.
Thanks, Naresh.
Before we start off, I would request the chairman of SIRC, CA Chennai Talkala, to address the members.
Thank you, Naresh sir. Today's evening speaker CA S. Ramesh sir and CA R. Sundararajan sir and other members joined this virtual session on live question and answer on bank audits. Very pleasant good evening and welcome to you all. As we are all aware, the role of the statutory auditor as well the branch auditor is very significant. By this time, most of our members are busy in the bank audits. It's quite normal that each one of us, despite of having much knowledge on the most of the circulars issued by the regulator, we would still have a doubts on its application when we come across certain issues especially sitting with the branches. This forum would focus on the subject that are foremost importance for all the issues that arise during this audit, and our eminent resource persons would be sharing their expertise and exposure on the issues that challenges while performing these bank branch audits. Even several questions are raised by the members would be answered during the earlier seminars. But I have observed from the questions raised by the members, most of them are procedural doubts, and certain doubts are about the classification of the accounts to NPA, and cases are updating the accounts to standard from NPA. It's vice versa. It's a practical questions. Members, let us showcase once again our capability in the completing the audit with perfection and the quality, besides adhering the time schedule of the bank audits. I request every member who are joining this bank audit, the live session, please visit our YouTube channel of SIRC for the previous sessions. And for instance, yesterday there was a program on the new dimension in the banking frauds by Mr. Rahul Magan. It will be really helpful and useful to identifying the frauds which is happening presently in the banking industry. With this, I wish this virtual live session to be a grand success. Thank you all. Thank you once again.
Thank you, Chairman. Thank you for sparing your time and addressing the members. Friends, we would start with the brief address by both the speakers, since most of us have started the audit. And after a brief address by both the panelists, Then we get into the questions which have come, and the speakers would be answering on that. So before I request CA Sundararajan to address the members, I would like to briefly introduce him. CA R. Sundararajan is a fellow member of the Institute and is a managing partner of Messrs. SR, BR and Associates, a firm with more than 3 decades of practice and having offices in Chennai, Hyderabad and Kochi. He is a qualified information systems auditor from ICAI. He is a specialist in the area of auditing and assurance practice. He has been addressing almost all the branches of SIRC on the topic of bank audit, audit and assurance standards, accounting standards, tax audit, corporate audit, due diligence audit, and code of ethics. He is a visiting faculty in Institute of Cost Accountants and Company Secretary Institute at the Office of C&AG, Staff Training College of RBI, Indian Bank, and Indian Overseas Bank. He has co-authored a book on bank branch audit released by Chartered Accountants Study Circle, Chennai. He's been a part of group of ICAI on various topics of professional interest on guidance note revision, corporate audit, accounting and auditing standards. He's been co-opted for various committees of ICAI at Delhi level and also at the SIRC regional office level on corporate laws, members in industry, CPE committees, to name a few. He's been a convener of the Chartered Accountants Study Circle and have conducted many workshops, seminars, and annual conferences. He has held the position of Treasurer, Secretary, Vice Chairman, and Chairman of the International Fiscal Association Southern Region Chapter. He's been actively involved in Lionism and regular blood donor, and also a consistent contributor of social needs of the society. This is a very brief profile of C. Sundararajan. Welcome to you, sir.
Thank you.
I would also like to take this opportunity in introducing CAS Ramesh before we go on to the question answer session. CAS Ramesh is a graduate in economics from Vivekananda College, Chennai. He is qualified CA in the year 1982 and commenced practice from 1983. He is currently partner of SR, BR and Associates LLP. He is qualified information systems audit exam conducted by the Institute in the year September 2007 with an All India rank of 10. He is empaneled as a peer reviewer with the peer review board of ICAI. He has presented papers on bank audit, accounting standards, auditing and assurance standards, peer review, and several other seminars organized by SIRC and various branches across South India. He has presented paper and seminar organized by Chambers of Commerce, and he has contributed articles in CA Journal and SIRC newsletter. He has co-authored a book on the bank audit seminars. He is also a faculty for training programs organized by C&AG office, Chennai, IOB Staff Training College, and at Tamil Nadu Commercial Tax Department, to name a few. He is also a volunteer blood donor and has donated more than 40 times in the last 12 years. With this brief profile, I welcome both the speakers to address the members. So may I request CA Ramesh to start off with a brief address, and then Sundararajan sir, and then we can go on to the question answer, please.
Shri Gurubhyo Namaha, salutations to all my gurus, without whose help and guidance I wouldn't be what I am today or where I am today. Good evening, everybody. This is indeed a pleasure to be here with all of you this evening to answer your queries on bank audit. I think the initiative taken by SIRC must certainly be lauded. In my memory, I don't think we have ever had a session like this during the course of audit. I think it's about 4 or 5 days from the time the bank audit was started by all the members in South India. And it's just about the right time. We are in the mid-course of audit, and probably today is the right time to have all the doubts and queries answered by me and Sundararajan and others who are around. I think it's a wonderful idea, and definitely SIRC and the chairman and office bearers need to be applauded for this. I only want to bring one thing to your attention before we go on to the questions. In the last 4 days, I have been receiving calls from members across South India, where there seems to be some confusion about the COVID-19 regulatory package that was issued in 2020, wherein there was a 6 months deferment. That along with that, whether that 6 months should be included in the moratorium of 24 months that could have been granted by the banks by August 2020 circular or May 2021 circular. I think if you look at the COVID-19 regulatory package, it spoke about deferment of 6 months from March to August 2020, and interest is to be accrued for that, and the interest should be cleared out as soon as the moratorium period is over, and if it is not cleared out, it could be converted into a working capital term loan, which should be cleared out by 31st of March 2021. So with that, the COVID regulatory package ended. In August 2020, they came up with a resolution framework which did not refer to the COVID-19 regulatory package. It referred to the prudential framework for resolution of stressed asset, which was issued in June 2019 circular, which even as on date does not actually apply to loans less than 1,500 crores exposure. But it is that circular they referred to, and in that, in the August 6, 2020 circular, they gave a lot of concessions to people who have been affected by COVID. In other words, borrowers must demonstrate that there was stress due to COVID, and only those people who are eligible for it by the August 6, 2020 circular. They said you could convert a part of the interest accrued into a funded interest term loan. You could reschedule the term loan payments. You could increase or decrease the working capital limits, taking into account the stress that the borrower has suffered and the future income streams that is expected or anticipated. This was given to corporate borrowers and personal loans, eligible borrowers. That circular actually does not have too much of relevance today, except for corporate loans, where if the date of invocation had been somewhere in December 2020, then the implementation could go anywhere up to June 2021. And therefore, for 3 months in the first year, in this year of audit, if there had been any implementation of that August 2020 circular, we need to look at it. Coming to the May 2021 circular, this circular refers to the regulatory package or the as 1.0, and they are not referring to the regulatory package issued announced in 2020, but they are referring to the August 6, 2021 circular. 2020 circular, not the regulatory package of 6 months deferment. This August 6, 2021 May 2021 circular has again given a window of 5 months for restructuring of accounts, provided they have not already been restructured with the 2020 circular. If they're already been restructured with the August 2020 circular, then May 2021 circular denies those borrowers any concession, except for one thing. If they are already been restructured in August 6, 2020 circular, in May 2020, they have given one concession for those borrowers, saying that if they have not been given any moratorium, or if they've been given a moratorium less than 2 years, now they can be given moratorium up to 2 years, or whatever was given earlier, that difference can be given. This is the only thing that has been given for people who have already been restructured by the 2020 circular. May 2021 circular or August 20 circular or the COVID regulatory package circular, all of them talk about financial stress. In fact, the COVID-19 regulatory package did not really talk about financial stress. They said it can be applied to be given to all the borrowers across the board. But the August 6, 2020 circular and the May 5, 2021 circular, both of them very clearly talk about that the eligible borrowers are those people who have been financially affected by COVID. In other words, the livelihood of the borrowers should have been affected, and that should be documented. The circular does not say who are the people who have been affected. It only says there must be a board policy which says who are the people who are eligible to come under these two circulars because of COVID-related stress. So as auditors, I think we need to first look at the circular issued by the central office, which should be available in the branch, as to who become the eligible borrowers and what are the documentations that need to be there to prove that the borrower was affected by stress, financial stress due to COVID. And if so, then those concessions will be extended based on the conditions prescribed in those two circulars. The most important circular is the May 2021 circular. With this, I would pass on the opportunity to Sundararajan to give his opening remarks before we move on to the questions.
Thank you, Ramesh. Thank you, Naresh and Chairman Chinnamastan. It's once again I deem it as a great privilege and pleasure to address the SIRC members on this Q&A session. Before going into the Q&A session, I would like to share a few of the thoughts, because the last 1 week where I have been interacting with a lot of members and also the branch where we have been doing the statutory audit also. What's happening is, in respect of the returns which is being generated from the system, the branches are having some issues where there is a specific difference in respect of those returns, including the advances itself. So until the advances returns and the balance sheet is matching, that advance returns cannot be taken at all, number one. Second issue, in respect of NPA returns also, the opening NPA returns and closing NPA returns and movement of NPAs has to be matching perfectly to the balance sheet. If these two items are very, very critical, I see a great difference in many of these places. This is the second item which I would like to mention, caution the members. Please ensure that it is tallying into the perfection, because it's all systemized. They will be coming and saying that everything is systemized and it is generated from the system. But system cannot generate a wrong figures. It will be generating the right figures only. Probably some logics issues are there that they will have to address it, number one. And regarding the questions which is happening in respect of the branches, including the branch management, they are under small bit of confusion regarding what Ramesh was talking about, this restructuring. They have done the restructuring without getting the real information from the respective borrowers regarding what is the reason for the restructuring, how he is affected by COVID. The documentation is not yet complete. Without the proper documentation, a restructuring cannot be said to be a right restructuring in accordance with that particular norms. See, restructuring can be done at any point of time. Restructuring can be done. There is no problem at all. Once you do a restructuring, an account becomes substandard. This is the reality. The reality is whenever an account has to be restructured, it will become a substandard. In this case, when we use this restructuring for what you call restructuring circulars, wherever it is being given for the benefit of the member, benefit of the borrowers, we have to ensure, and it is the responsibility of the borrowers to demonstrate that they are eligible for the concession given in that particular circular. Without knowing this, the branch people have taken a letter and they have structured and they have done it. So the auditors are having a confusion whether that restructuring can be accepted as it is. This is the second issue which is happening in respect of the branches which are already started the audit. Please be sure that it is the responsibility of the branch management and the borrowers to prove to your satisfaction that they are eligible for the benefits given by the benevolent circulars. This is important. That's second item. Third important item which we would like to mention is regarding the manual corrections which is being done, still done by certain branches. What happens is, as far as the NPAs are concerned, particularly in respect of education loans, they are still manipulating the records. I don't say manipulating. They feel that it is right only because the date of repayment, they just extend by 1 year or 2 years. The account is jumping out of NPAs. Please, for this particular purpose, you can go through this exception report for ensuring that whether any manual data corrections are happening, number one, because we are supposed to give a report in the LFAR also. Secondly, you can also start with the verification of SMA 012 statements of January and February, because what is available in SMA 0 or 1 or 2 in respect of those 2 months cannot be automatically removed to the regular account, which you can directly examine that. This is a clue which I can give you. Please go through that. And one more important item as far as jewel loans are concerned, the question has been asked by various branch auditors. What happens is they don't actually close the jewel loans, but after 1 year, they give a pass and entry this side and pass and entry that side and ensure that the jewel loan is getting renewed. It is for our responsibility to confirm that whether that is in line with the actions of the RBI circular. Please examine. You have to examine in detail by ensuring that there is a transaction entry in the books. Of course, once there is a debit and also a credit in respect of the same day, please ensure whether the transactions are entered in the day book or the transactions are entered into the respective date on the party's SB account, etc. In that situation, it may not be a performing or not, but that issue is not going to happen. Secured and unsecured also will not be a problem. But there is a procedural default which is happening. Please report it accordingly in the LFAR. These are the few thoughts which I thought, other than these questions which has been asked, to apprise the members, because the last 4 days I have been asked questions by various members on these lines. So I thought of clarifying it. Thank you very much. We can go ahead with the organized program. Naresh?
I think sir has exited. So
Okay.
sir, is my screen visible, sir?
Yeah, visible.
Yes, sir. So we'll go with the first query, sir. That
Okay.
is advanced.
Should the question be read? I think it's available on the screen. Everybody will be seeing that.
Yes, sir.
Yes, sir.
Ramesh, I will take up the first question. Okay. So this is regarding this bank guarantee. They are asking whether there is any specific restriction regarding BG for procuring material. Absolutely, there is no restriction at all. BG can be given for any performance or supply or whatever it is. The only point which has to be done is BJ bankers can also honor the bank guarantee. There is no problem. Once it is invoked and bank has honored, from that date it becomes a funded limit. Until then, it would have been a non-funded limit. From that date, it will be a funded limit. And within 90 days of that date, day, the amount has to be funded by the borrower. Borrower has to refund the money to the bank. If that is not happening, then it will become a non-performing asset. As far as this year's branch audit is concerned, if the bank guarantee invoking has been done before 31st of December 2021, obviously it becomes a long NPA. Once this bank guarantee, defaulted bank guarantee becomes an NPA, obviously all the other facilities of that particular borrower also will become an NPA. These are the only aspects which will have to be seen, but only ensure that which is the date of the default of the guarantee, depending upon that, performing or non-performing assets will happen. As far as this eligibility for issuing BG is concerned, there is absolutely, it is on the respective bank's policy and according to the sanction ticket holding. Thank you.
The second question is on reports, sir.
Sir, can we read that question?
Yes.
We can understand, sir. If you give allows, then we can read, sir.
Yeah, please, somebody can read. No problem.
Right.
I have requested that way only because Naresh was originally offering for that. Suddenly his laptop has gone out of charge.
Yes, sir. He said yes.
So if
Yes,
you
sir.
want, we will read from our end, sir.
Yeah, one of you can read. No problem.
So is ICOFR reporting required to be done for those branches which were not scoped during 2021, but have been scored for 2021-22? If yes, then what kind of testing is required to be done to check their operating effectiveness?
Ramesh, are you taking or are you not? Okay. Sir, you are muted.
This is essentially a question on internal controls or
Financial
financial
reporting.
reporting. Okay. Well, I don't understand what he means by they are not scoped for during 2021. If there is an audit report, if there is an audit for that branch, then as part of the audit report, we also give an annexure on internal controls over financial reporting. Now, how to go about it? It's a very, very long, detailed process. The institute has given a guidance note or a technical guide for ensuring that you check how to check the internal controls over financial reporting. You need to prepare a risk control matrix. And once you list out all the steps on various steps in the risk control matrix, then check that whether it's being done properly. For example, deposits, acceptance of deposits. What are all the conditions that have been laid down by the bank for accepting a deposit? Maybe KYC should be there should be an application form, there should be a photograph, and all these things which are there should be there. So you list out all those things for every activity of the branch, and then check whether those activities have actually been fulfilled at the time of the activity being undertaken by the branch. So a risk control matrix has to be prepared, and based on the questionnaire on the risk control matrix, you need to ask the questions and also observe what has happened and report on the effective internal control on financial reporting.
To add to what Ramesh has said, I have gone through one of the banks where they have already prepared this sort of matrix. They are asking us to confirm whether this system is happening or not. Yes or no. If not, you have to give a remarks. So in that situation, if there is a risk control matrix which has already been drafted by the branch, because obviously they will be having their own internal risk mechanism. On that basis, they will have calculated it. We are supposed to verify that and verify the veracity of the fact which the management is giving. Whether it is really followed, yes or no, you will have to give, and you will have to give a remark also on that matter.
Yes, sir.
The next question.
Yes,
Next is LFAR. We are concurrent auditors of Canara Bank. Our branch is not subjected to statutory audit this year, but we have been asked to certify LFAR and sign balance sheet. Can we take up the assignment is it is allowed by ICAI?
It is not allowed by ICAI. As the concurrent auditor, you cannot do the statutory audit and do attesting the long form audit report and certifying the balance sheet amounts to a statutory audit. In fact, if you look at the latest ICAI magazine that's come out, the first 2 pages deal with what are all the situations under which you cannot do the statutory audit of the branch. Please go through that. In my opinion, you can't do the audit if you're the concurrent auditor of the branch. Sundar, you want to add something to that, Sundar?
Nothing specific, but only thing is the branch. This question has been asked by so many people. But what happens is this becomes an effect on independence threat, basically, and also self-examination threat. These are the 2 threats which are being triggered under the code of ethics. If the bank is insisting on that, probably the one possibility they can. If the bank is the ICAI categorical about this not to be done, then it's a different issue. Otherwise, we will have to take necessary protection to ensure that the threat is not being the threat is not overdoing your professional ability. But invariably, what happens is, as well as long form audit process is concerned, in fact, yesterday when I was doing a branch review, I was able to see that the concurrent auditor has been giving repeatedly saying that this is not done, that is not done, that is not done, this is not done. If he is going to give a report today, he will be reviewing his own job, because definitely there will be a wrong. So morally and also ethically, it is not acceptable to do the audit. It's better to reject it in that manner.
In fact, to continue with what you said, Sundar, I think it's specifically prohibited by ICAI.
Yeah. They have given a circular itself. They have given a circular. It's not. I think they have said that not advisable to take up. They have not said it's not.
No, I think you can't. They have said you can't do it. We'll check that out. If I remember right, the year before last or 2 years back, ICAI in fact wrote to Bank of Baroda saying, "How can you ask our concurrent auditors?"
Correct. They gave it in 2020.
So I think
2020 they wrote it.
Members should be advised to write to the bank or tell them that they can't do it because of the ICAI, and also probably write to the institute and ask for a clarification.
That's good, sir. Because most of the members are facing. So
they are not supposed to.
Yes, sir. The next question, sir. Regarding CPS, how to identify NPA regarding the short and long-term duration crops?
Okay.
Whether it is CBS or anything for that matter, first of all, we'll have to understand short and long-term duration crops literally. Yesterday also we had the same issue in one of the branches where that SBLC report is not given by the respective branch. In a Karnataka branch, somebody has asked this question. See, we are bound by the SPLC, state level banking committee's recommendations only to decide on the long-term duration and short-term duration, because the period has to be determined by the respective state SLBC only. On that basis, in case of a short-term duration crop, they have a time of two crop seasons. In case of long-term duration crop, they have one additional season. So effectively what happens is, in case of a short-term duration crop, which is normally 6 months, from the date of sanction, for the date of repayment will be around 6 to 7 months. That is a normal period of repayment. From that, there may be 2 more crop seasons for the recovery, which means 1.5 years of period will be available for before classifying it as an NPA. So from the date of NPA, you will have to take as 18 months in respect of short-term duration crops, and long-term duration crop, it may be 24 months. But only problem is, yesterday in one particular branch, they are saying that 31 months they have calculated. 31 months they have calculated as advisable in respect of short-term duration crop. We will have to see the SLBC's calculations and examine whether it is right. If that is right, you can leave it like that. As far as CBS is concerned, the question, I presume that how the CBS it has been, whether it is CBS or whatever it is, the calculation has to be like this. The due date is 1/1/2020. And the date of finalization we are doing is 31st March 2022. How much time has elapsed? If the time elapsed is beyond what has been suggested by the SLBC for the purpose of short-term duration crop, you will have to classify it as NPA. Otherwise, you will have to classify it as performing a certain limit like that.
I think
there is a guidance note also issued by the Institute of Charters of India, but they have given a specific example to the satisfaction of a Maharashtra State Level Banking Committee. Our respective states have to be adopted according to that requirement. Yes, sir, Ramesh, you can go ahead.
I think the member has asked it under CBS for the simple reason that, what strikes me is the CBS cannot identify an NPA for agricultural crops. I think it's only you and me or the bankers will have to identify that. In fact, the RBI circular, when it spoke about automatic identification NPA, they said automatic identification NPAs other than agricultural crop, because the logic is very difficult to build in, or probably they want to build it in later once this sets in through. Sundar was very right in saying that there is an illustration in the latest edition of bank guidance note issued by ICAI. Please look at the chapter on agriculture. There is a very good example there. Although it pertains to only one particular state, you can fit in those dates according to the dates that is found in the SLBC and do it. In fact, that illustration has made one particular distinction. They are talking about a farmer who has only one crop during a year and a farmer who carries out 2 crop seasons in the year. So where a farmer is doing only one crop, the date is different. Where he is carrying 2 crops, the date is different. But the illustration is very, very self-explanatory. All you need to do is spend about 10 minutes looking at the illustration and then substitute the disbursement period and the crop season dates as per the SLBC of Tamil Nadu or Kerala or Andhra or whatever state it is. Into that, you will be able to arrive at the NPA date.
Okay, sir. Let's come to the next question, sir. Regarding advance, when will bank audit completely phased out, and what initiative the institute is taking towards this end? We are not getting the bank audit since many years. Why should we ask the questions and do not understand?
Chairman, you are the best person to answer this question.
I think this regarding the appointment of audit, sir. This is the appointment of audits.
Absolutely.
So most of the members knows that all the public sector banks is merged with a few numbers only existing, and coming to that eligibility and the number of audit of the banks, the firms are more eligible than the branch audits. So it comes under as a demand and supply. This trend will continue. It's institute side. It's took all the steps towards getting all the firms by applying the cooling period, by giving the 2 branches only to the firms. But still, it needs to be steps to be taken from the institute side, always the RBI side. Maybe next year will definitely it will improve, sir, regarding this appointments. And coming to the other question, sir, next question, advances. If one account is half of the total advance of the branch, in such a case, what are the things to be checked and taken care of?
Well, whether it is one account or 2 accounts, this is a large account. Large account has been defined as 10% of the fund-based plus non-fund based advance of the branch. So if the fund-based is, let us say, 100 crores, and you have another 30 crores of non-fund based, you add up the 2 and calculate 10% of that, which works out to 13 crores or 10 crores, whichever is lower. So which means any account more than 10 crores would become a large advance. In the example that you're saying, let us take another example for illustrating this. You have a branch with about 60 crores advances and no non-fund bank guarantees or non-fund based advance at all. So which means 10% of that becomes 6 crores. And you compare it to 10 crores, 6 crores is smaller. Therefore, 6 crores, any account more than 6 crores would be a large advance. The speaker is obviously, the queryist has said it is 50%. So I'm assuming it's 30 crores. There could still be one more account, which is large account in addition to this account. There could be 2 more accounts also. I think large advances, all of them will be looked at 100%. You will do a complete examination of the account, right from the sanction, credit appraisal, monitoring, and the documentation. Do everything. Also look at the performance of the account to find out whether it is performing or non-performing. There is no specific requirement just because it is 50%. It is to be treated as a large advance if it falls within the definition of large advance, and all things that you do for large advance is what you need to do here. Sundar.
Yeah, you're right.
Can I add, sir, something?
Yeah, the point is very, very clear. But what he has asked is, if it is 1/2 of the advance is one advance, doesn't matter. It becomes a large advance. Only thing is, you have to ensure that this set of advances is being verified. And we cannot leave out the other balance 50%. Other balance 50%, we have to talk about process. That's what they say. Even if I presume that all other advances are small advances also, the process of the advances has to be verified. Without that, we cannot conclude. That is what I was telling in another session also. Earlier, we have been missing out loan on deposits and loan on jewels, etc. We will not see. Now, we are supposed to verify at least 2-3 samples of each and every advance, because we are supposed to say whether the process of advance sanctioning and everything is being followed properly. So we can't avoid any of these advances. All the advances has to be verified, at least 1 or 2.
Yes, sir. The next question regarding advance. How many times an account can be restructured? Any restriction regarding that?
Well, RBI has not laid down any condition as to how many times it can be restructured, but they have categorically stated in very many circulars that repeated restructuring should not be encouraged or should be frowned upon. So they are not saying that you should not restructure for a second time. But please remember one thing: when an account is restructured, it must be downgraded, unless they enjoy certain benefits as per the latest, as per a circular given, like the circular given in May 2021 or August 2020. Those two circulars specifically talk about restructuring without downgrading. Otherwise, restructuring is at the option of the bank. They can restructure a loan, but they need to downgrade it. Can they restructure only a standard account? No, they can even restructure a substandard account, but then it has to be downgraded. A standard account restructure will become a substandard account. A substandard account restructure will become a doubtful account. So downgradation is a must. But again, having said that, if they keep on restructuring year after year, then I think as auditor, we need to question that. Is it a process of evergreening to keep it not slipping into NPA? To that extent, even if it has been the second time of restructuring, I might not classify it. As long as we downgraded, I might not do anything about asset classification, but I will certainly have a very strong comment about it in my long form audit report.
Yes, sir. The next question regarding the DP calculation, sir. As per the sanction terms, DP per CC account should be calculated after reducing the creditors. However, banks has not received creditor list or considered for the DP. According to me, if the creditors on the basis of audited balance sheet as on March 21 are considered, there will be no DP and the account becomes NPA. How shall I report this issue? There are no monthly creditors list to work out the DP.
2 points which I would like to mention to this query.
Yes, yes,
number one.
sir.
First is drawing power computation is wrong, means that itself has to find a report in the long form audit report now, because there is a question which has been asked: is the drawing power computed regularly? There is a specific question. So if the sanction ticket clearly says that creditor has to be reduced, in that situation, the statement of monthly stock statement is being given also has to have this element of sundry creditors. If it is not given, you can take the previous whatever will be the statistics available and you can compute the drawing power. But if that is not happening and if it is reduced, it will become a NPA. You classify it as NPA. There is no requirement for you to report separately. You classify it as NPA straight away. Apart from that, in the long form audit report, you have to mention that this drawing power computation is not done properly by the branch. In that situation, you have to mention this particular name and close it. Number one, it has to be an NPA only. Number two, it has to find a place in the long form audit report also. Number three, please confirm the sanction terms, because normally nowadays the system has gone off that reducing the creditors from the stock statement has. Most of the banks have stopped it, because for the purpose of determining the drawing power, they are not touching the sundry creditors. But for the purpose of determining the MPBF, they consider the sundry creditors. For determining the drawing power, they are not doing that. Please confirm, because since you have mentioned that sanction term says so, then it becomes an NPA only. You have to classify it as NPA and also report in the long form audit report. But please confirm once again with the respective sanction term.
Ramesh sir, do you want something?
Yes, I have a different opinion as to what Sundar said regarding the policy around with banks. Sundry creditors need to be reduced to arrive at this thing. There is no doubts on that. RBI came up, there was a lot of confusion regarding this. RBI in 1993 came up with a circular regarding this, wherein they said it has to be reduced. You cannot fund a stock which has already been funded by the sundry creditors. I would advise the members to read paragraph 11.12 to 11.15 in the issued guidance note. The page number is 361 in the PDF form and 347 in the printed form. please go through it where it is very clearly given that it should be reduced. I completely agree with Sundar when he said you need to look at the sanction letter, but I think you also need to look at the policy of the bank. If the policy of the bank says that you don't need to reduce the certificates, I might not do anything with the classification, but I will certainly have a very strong comment on the long form audit report, because I think the policy is not in consonance with what Reserve Bank of India has stated. And that I would put it in my long form audit report. The paragraph number is 11.12 to 11.15. It's about 2 pages. Please read through it. It gives you a fund of information on the entire process, entire question of whether sundry creditors should be reduced from the stock to arrive at DP. Thank you.
Thank you, sir. The next question, sir, regarding LFR. We have been appointed as the SCA, Statutory Central Auditor of a non-scheduled primary Tier 2 urban cooperative bank based in Kerala. We request your good self to provide the classification regarding the reporting format of LFR for the financial year 21-22 of USB as regards its head office and the branches. Please clarify as to whether we should follow the last year's report format or in the general format as applicable for the commercial bank September 2020 LFR review circular. Further, please clarify whether LFR should be reported separately for each of the branches of the bank or consolidated LFR for all the branches. Would suffice. Please also advise on other additional complaints, if any, awaiting for earliest confirmation. That means he is asking complete almost 50% of the bank audits complaints. Right, sir. Sundararajan, sir, you can add then Ramesh, sir.
Has already done a research on this, actually speaking.
Yes.
But the point which has to be mentioned is any branch. I'm not aware of this UCB, but anyway, whenever a bank has multiple branches, each and every branch has to be covered by long form audit report, and that should be a consolidated report also. There is nothing more than to add on that. But regarding the format, Ramesh has some information. Probably he will be able to share it.
Well, I think the Institute of Chartered Accountants of India has come out with a guidance note on audit of cooperative banks, the district cooperative banks, in which the format of long form audit report, of course, the guidance note is about 3-4 years old. To my knowledge, there is no change in the format for the urban cooperative bank, and whatever the format that was available last year is the same format available this year. So I would advise the member to look at this guidance note also. See whether the format given there is the format that the previous auditor, since they say they are SCA of the UCB, check whether the same format is available, was the one which was given last year, and if so, continue with it. I think Sundar has answered the question whether long form audit report is only for a branch or for a bank as a whole. It is branch-wise, consolidated for the bank as a whole. As central statutory auditors, you will have to probably rely only on the report that you receive from the branches, and therefore it definitely applies to the branch also. The format, in spite of all my search, I was not able to locate the recent format. I don't think there's any change in recent format. It is still the one which was given in 2016 guidance note of Institute of Chartered Accountants.
Okay. Okay, sir. The next one is no allotment done even after FCA. This is regarding the appointment and allotment, sir. And this first... just
to add that particular question.
Yes, sir.
Me and Ramesh have been addressing the branches for more than 20 years.
Yes.
If I'm right, for the past 10 years, we have been telling that you are all are working on a bank audit, which is going to go off in the next 10 years. This is what we have been telling for the past 10 years. Next 10 years, it may not happen at all. But people have been telling that it is not going to happen. But now what has happened is the post-merger scenario, number of branches have gone down. And within the number of branches, 3,600 branches of Indian Bank was done last year audit. Now it has reduced to 2,100 branches. So to that extent, there is a reduction. And next, as far as private scheduled banks are concerned, they are going out of branch audit. Already quite a few banks have done. And now this year, Karnataka Bank has gone out of branch audit. So why? They are having one consolidated central statutory auditor, which is sufficient. So this need not be considered as a whether it's going to be a deterrent. It is be very, very clear that it may not be allotted at all. So that we have to look out for another opportunity, because ATAS function alone is not going to be our critical component. We have to find a way out of ensuring that by this process, you cannot just jump to concurrent audit, because the concurrent audit of bank is more dangerous than any of the audit which you are doing here. So generally people immediately say is, why don't you go for concurrent audit? Concurrent audit is the fees is also low and the extra responsibility is also more. So sit on the bank audit for a basic requirement. Let us look at some better opportunities for us to ensure that it is being done. This is my suggestion, not an advice, because I'm also not that very old to give an advice. It's a suggestion. If it has happened, fine. If it has not happened, that is a situation. That's all.
In addition to that, sir, but members should first focus on the appointment, because all of them are focused on allotment. Allotment is the second step. Unless you first appoint the bank, then only allotment we can expect. So he is supposed to add that word, not allotment, appointment only. And coming to FCA, there is no difference between FCA and ACA. That's RBI guidelines. It says that continuous 3-year COP. That's it. Whether it's the FCA or the ACA, there is nothing difference. Even 20 years having that ACA continuous practice, there's the equivalent. So there is nothing difference both and FCA. Then coming to the other questions are regarding the reports. It's a big question. He divided in 3 parts. We have started the audit.
We'll make it very, very short. Very, very short.
Yes, sir. Very short. Sir.
The question is very, very simple. They are asking that the email is not being able to be sent. This is the only question.
Yes, sir.
The point is very, very clear. The branches can send email. They are bluffing. Only thing is there should be some mechanism by which they will have to bypass this scenario, because they can send a mail to themselves by way of Indian mechanism. From there, they can take a copy and they can send it across. The same question was given to our staff also, but they were able to break it up and they say that through this route it can be given. Please insist on them. If this is not going to be given, I will not be able to do the audit. I will not be able to sign. The next moment you will get it. That's all. This is the only solution. There is nothing to guide or help you. You just focus on it. If it is not happening, go to the controlling officer, regional office, because the information technology support is only coming from the regional office. Go to the regional office and ask for that. It will be given. That's all.
Right, sir.
Check with your colleagues who are doing branches of the same bank. If they are able to get it, why can't you get it?
Why can't you get
it? That's the reason. So, as Sundar rightly said, please flag the issue to the zonal office of the controlling authority. Also flag it to the central statutory auditors. Whose address and email and phone number is given to you in the appointment letter. Take it up. Otherwise, there is nothing anybody can do to guide you. You have to fight and get this information.
Yes, sir. Regarding other questions, sir, how many UDNs required to be taken while auditing the bank branch? 1
UDN for the entire assignment. If there's a tax audit being done, you will generate 1 more. Otherwise, there's just 1 UDN for the financial statements, and all the certificates you send is just 1 UDN.
Yes, sir. The next one, sir, there is a shortage of NPA provision made by the branch by rupees 2,000. Will it be a MOC or just we need to report as observation? I think there is a threshold limit.
I think most of the banks today in their appointment letter are saying that you don't need to pass an MOC if it is less than this amount. Yes. I don't know whether this materiality was decided in consultation with the central statutory. Some of them say in consultation, some of them say not in consultation. But personally speaking, I think this materiality concept will apply to things like income or expenditure, short accounted or excess accounted. It should not apply for IRAC norms. For example, if there is an account which needs to be classified as NPA, and the amount, let us say the amount outstanding is only 75,000 rupees, and the bank has prescribed in their appointment letter that materiality is 1 lakh, anything less than 1 lakh, don't report. If I don't report it as an NPA because the appointment letter says so, tomorrow and RBI hold me responsible as an auditor of the branch, saying why are we not classified the account as 75,000 rupees as NPA when it should actually have become an NPA. So personally speaking, in my opinion, I would ignore this materiality concept for principle-based MOCs, which is IRAC norms and NPA classification. So whether it is 2,000 rupees or 20 rupees or 2 lakh rupees, I will pass an MOC. Sundar, your opinion, Sundar?
Absolutely, I concur fully with Ramesh. Materiality does not applicable in respect of principle-based entries. Whenever it is a principle-based entries, we cannot have a compromise. It has to be fully considered and provided for.
Yes, sir.
Yeah.
The next questions, whether we can accept the balance sheet wherein the provision for advance, including NPS, are not reported in liability side of the branch, but reported in head office balance sheet as confirmed to us. Matching principle not followed, please advise.
I think this member should understand the provision for doubtful debts is never made in the branch balance sheet. It is always there only head office. And if he looks at the audit report, it says subject to provision for bonus, subject to provision for gratuity, and various other provisions which are not made at the branch level, only at the head office level. Therefore, there is nothing wrong. It is the format prescribed by the Banking Regulation Act and the format followed across the board by all the branches of all banks in the country. Please go ahead, look at the other things. Forget this matching concept and all that. You are anyway stating in your audit report that provision for parent doubtful debts has not been made and you're proposing an MOC for it. That should take care. Please go ahead.
Right, sir.
But the important point which has to be taken is provisioning has to be calculated by us. Don't presume that once the provision is done at head office, why should I bother? Please understand, provisioning is required by the branch auditors only, because the audit responsibility of making provision is only with the branch and the auditors, very categorically mentioned about by Reserve Bank of India. So we are supposed to give the provisioning computation. Actual action happens at the head office. We're making it very, very clear. So you are bound to have the compute the provisions.
Yes, sir. Regarding the other question, with regard to Kisan Suvidha loan, term loan, or agri-mobile loan, term loan are for the tractor purchases. Is there any reason why the loan shall not be go into NPA even if more than 3 months EMIs is due for payment? With regard to existing bank loans, whether valuation is to be taken every 5 years, even though the loan term is 20 to 25 years?
I will answer the first part of the question.
Yes, sir.
With regard to the term loan for agri-mobile for purchase of tractor, the 90-day norm does not come into play. It is as per the crop season. So even if it is whatever the due date mentioned, after that, whatever crop season the farmer is following, please look at that, add that crop season. If he is following short-term crop, then you need to take 2 crop seasons. If it is long-term crop, 1 crop season before it becomes the NPA. Please look at Annexure 2 of the Master Circular on IRAC norms, which talks about those accounts where crop season will apply and not 90-day norms. Agricultural term loan, the crop season will apply and not your 90 days norms.
Okay. Yes.
The second portion of the question is with regard to existing bank loans, whether valuation to be taken every 5 years, even though the loan term is 20 to 25 years. See, the point is, as far as NPAs are concerned, the valuation has to be done once in 3 years. This is what has been mentioned very clearly by the Reserve Bank of India in all its circulars. But the point is, once it's a long-term loan, the branch management should be aware. If they are under continuous monitoring, there is no problem. If they are not, the one way of having the monitoring in a proper manner is to visit the assets, visit the security which has been given to ensure that the security is still there, or the security person giving person is also there. I can have as many examples as possible in respect of security. There are situations wherein the security is not all there. It is, once there was a widening of a road, one house property has already been taken away by way of widening of road. In that situation, we are presuming that the security is there, particularly in case of long-term loans of 20 to 25 years, that is definitely bound to happen, that the security is not there at all. So for that particular purpose, a valuation exercise can happen. It is not the question of every 5 years or compulsion as the case may be. But 20 to 25 years of loan is normally available only in respect of housing loans and not any other loans for that matter. But once it is a housing loan, obviously, periodically, encumbrance certificate has to be obtained at least. To that extent, there will be a security which is available. I don't see any other loans which will be available beyond 20 to 25 years, in my opinion.
Thank you, sir. The next question, sir, is the CRILC reporting. I think it is the CRISIL.
No, it is CRILC reporting. It is CRILC.
Okay, reporting is applicable to retail loans. One client took a more than 5 crore home loan, but not reported in CRILC.
Yeah. The CRILC is in respect of all large advances. It is not the question of whether it is retail or not. Once it is considered as a large advance, CRILC reporting has to happen, because they will definitely report, because it is an RBI's requirement for identifying the large borrowers at one particular level. So CRILC reporting will be applicable in respect of retail. He has mentioned as retail loans. It is in respect of retail loans also.
The next question, sir. The customer did not detect TDS for a home.
Sorry, Chairman.
Yeah.
I remember right. The exposure should be more than 5 crores to be reported to CRILC.
Yeah, 5 crores. That's what he has said.
That is not there. You don't know.
That's why he has mentioned as 1 crore has taken as 5 crores. That's why I'm telling.
Yes, sir. The other one is customer did not detect TDS for a house purchase more than 5 crores. Did we need to mention anywhere?
Why are you bothered about customer not detecting TDS? We are doing the audit of a bank. We are not doing the audit of the customer of the bank. I don't think we have any role to play in that.
Okay. Right, sir. The next question. What action to be taken in case of migration mismatches seen in the accounts? Also in case of GST?
Do you want to take the question or should I take it?
Yeah, please go ahead, sir.
Okay. In case of migration, if there has been a migration one platform to another platform, then an audit, IS audit is done by the head office for every branch. At the time of migration, if there are any accounts that have not been reconciled, they are kept in what is called a suspense account or a migration mismatch account. Now, this suspense account is normally closed out by the head office and the branches before the year end. In case it's still there at the year end, you have a migration suspense account. You need to get the breakup of the account to see whether it has an impact on the financial statements of the branch. If so, you need to report it and, if necessary, pass an MOC. Otherwise, if they are only matching, there are issues which are not really affecting the financial statements, the true and fair view of the branch, you don't need to worry about it. In the case of GST, it's very, very difficult to say what you need to look at because every branch has its own system of accounting for GST. I think most of the banks have a system whereby the GST input credit needs to be accounted for at the branch level and passed on to the controlling, not necessarily the head office, but for example, let us say there is a bank based in Bombay which has branches in Chennai. Then Chennai branch will pass it on to the Chennai controlling authority so that they can pay the tax of the entire Tamil Nadu as a whole GST. Similarly, the GST payable also is calculated entirely with the system and automatically it gets transferred to the head office. So you just need to look whether the ITC has been properly accounted. In case where an ITC, they are eligible for the ITC, has it been taken and accounted properly? Once it is accounted, it automatically gets transferred to the controlling authority who is responsible for paying the GST. So there's not really much for you to see. But again, I would like to draw your attention to the fact that there is a guidance note issued by the Institute of Chartered Accountants of India on audit of GST in a bank. Please go through that. If you still have further doubts, I think you can mail me and I would be able to help you because I had the opportunity to revise that guidance note last year. So other than that, I don't think you have too much to worry about as far as GST in the branch at the branch level is concerned.
Yes, sir. The next question, how to determine the quantity of samples in case of loans and advance?
It's all depending on the respective auditors sampling techniques which you have been always using. First of all, in respect of any particular branch, once you cover the large advances, obviously around 50% of the advances will be covered. Because just yesterday, I was seeing one of our branches where out of 500 crores of advances, some 6 accounts covers 350 crores, which means you are almost done with the branch. But at the same time, as I told you already in one of the earlier questions, balance of 150 crores also has to be covered by periodical samples in each and every cases. For example, in case of a vehicle loans, we have to pick up few items. In case of other term loans, we have to pick up few cases. In case of loan and advance also, we have to pick up few cases. Ultimately, you have to ensure that reasonable amount of loans are being verified to the satisfaction of the auditor. It is for you to get audit satisfied. If you feel that by seeing 2 accounts, everything is done, it's for you. Ultimately, you will have to convince at a later date when somebody comes and asks you, how do you determine this particular sampling? Once again, the standards on sampling has to happen, number one. Second important issue as well as you are concerned, when you calculate this computation of samples, please, there is a checklist which we have prepared for the Chartered and Study Circle, which is available on our website of www.casconline.org, where you can say analysis of advance, portfolio of advances. That portfolio of advances you can download in the Excel sheet and convert. In that, each and every segment of loans, you can say what is the number of accounts as per the branch, what is the volume, number of accounts, what is the percentage, as balance outstanding, what is the percentage. Same branch, same buckets, you pick up 10 items or 7 items and calculate what is the number of accounts and what is the total amount which has been verified. If you are able to say approximately 60 to 65% of the advances has been verified by you, you are through. You don't have to bother at all. This is a thumb rule. Once again, I say 60-65% is only a thumb rule which I am suggesting. It is depending upon respective company and respective branches which you are picking it up.
Yes, sir. Coming to the other question, sir. Can interest to be charged for an account if it is already in an NPA? And the second one, regarding that multiple customer IDs, sir. how to mandating to fill in the PAN and with Aadhaar. The third question is, during the same day, our audit income was also carried out, and the income auditor
Okay, I have
and
a
joint.
No
Yes,
problem.
sir. Yes,
So
yes,
the-
please, sir.
Once an account is classified as NPA, you want to take this question, Sundar?
Yeah, I'll take it, sir. No problem.
Once an account is classified as an NPA, the system will automatically stop debiting interest. So if you find interest being debited in the account, it must be a manual entry, in which case you certainly need to report it. But to my knowledge, all the banks, even 4-5 years back, had their system set in such a way that the interest does not get debited to a NPA account. It gets debited only when there's some recovery of, when money comes into the account, a recovery is made. And at that time, the arrears of interest will get debited first, and then the arrears of penal interest first, then arrears of interest, then current penal interest, and then current interest. Till then, there will not be any debit. If there is a debit, please check whether it's a manual debit and the reasons for it. It should not be there. You need to pass an MOC to take it off. Coming to the second part of your question, where KYC has not been followed, I think it's a very serious issue. If the bank has, wantonly gone ahead and opened multiple customer IDs to the same customer by playing around with the spelling or giving a gap between S, H, and G, you need to really examine the other accounts also to see whether some malpractice has happened. I will use the word malpractice because it could be a case of money laundering. You need to be very, very careful, look at it, and then come to a professional judgment and go ahead with it. The third question is, your job is different. The income auditor's job is different. Both of you have been given assignments. Both of you might have jointly located the leakage of 2 lakhs, but I think he will report it in his report. You will also report it. You will not only report it, in my opinion, if the amount is 2 lakhs, it is material. I don't think any bank, central auditors or the bank has said, if anything less than 5 lakhs only, please report. Most of them probably have 1 lakh. This is an MOC to be passed, recognizing the income. So please do that. Sundar, I would like you to add on to the question number 2.
Yeah. The second question, which just now I was telling you about this jewelry loan. In case of jewel loans, these things definitely happen because the Balaji will be having one SB account. Balaji SHG will be having the jewel loan one account. They will create one Balaji SHG and the old loan will be closed and this loan will be open, but the SB account will be the same. These sort of things are also entering into a window dressing methodology, number 1. Second issue, as far as this KYC guidelines and PMLA guidelines are concerned, now the LFR, one more special point itself has been added. Have you gone through the branches advance, and in your opinion, is there any violation of KYC guidelines and PMLA guidelines are there, which you are supposed to give a report, which was not there till 31st of March 2020. From 21 onwards, it has been brought in. So please ensure that also has to be examined. Without that, you cannot close it. Once you have a suspicion, go into other areas also similarly, and you can, it's all easily findable. See, what happens is we are given an access by auditors module. In that module, you can list out the names. You can easily find out with the same name or similar name, will be able to drop down and you'll be able to get it across. And as far as revenue leakage is concerned, as Ramesh correctly pointed out, what revenue audit is done is of irrelevant for me. As far as we are concerned, we are supposed to give an MOC because the financial statements which you are going to sign is without affecting these 2 lakhs. So definitely you'll have to provide an MOC. You please report it in both LFR as well as in MOC. Beyond that, why this leakage has come? Because it has an effect on the system. Because what has happened is, as far as system is concerned, the recognition of interest is concerned, it is automatically generated from the system. If there is a revenue leakage to the extent of 2 lakhs, definitely there's going to be some critical error in the system which has to be rectified rather than going for only this entry. That you have to give it in the form of an LFR also. These are the 2 important data which I wanted to add to what Ramesh has told.
Yes, sir. The other question, sir, regarding the retail hub asset, you got that audit, there is availability only sanction letter, no other documents available. That's the rest of the documents available, other branches. And what you can do as an auditor? What is the purpose of audit? Please clarify.
So as far as retail hub branches are concerned, they call it as retail asset hub in Canara Bank. In some other place, they call it as RACPC branch. All these branches, they are only processing the loan and giving the credit appraisal. But the disbursement is happening in a particular branch. Documentation is kept at the disbursement is done at the branch and monitoring is done at the branch. Certain places, RSCPs does the monitoring also. Only thing is we have to go through the policy of the respective banks and what is happening there. To that extent, we have to provide the LFI report because branch auditor will be coming and picking up only few accounts and probably they will be doing the verification. But as far as this RAH branch as far as Canara Bank is concerned, all these accounts come under your priority only. You will have to, it's your prerogative to go and verify the credit appraisal, whether the credit appraisal has been properly done. You are bound to have a reporting in the LFIR. Whether you have to verify all the sanctions, once again, that is not required. Once again, depending upon your sampling methodology only, you can give it accordingly and you can give it.
Yes, sir.
Just to add to what Sundar said, perfectly right. I think that's the only process. I think if you can go and spend an hour or two before you start the audit, or even if you start an audit with the branch head, which is normally headed by an AGM. These kind of retail hubs are headed by an AGM. Sit with them and find out what are all the functions of the branch. There will be a detailed circular talking about the functions of that particular branch. Look at that circular, find out what are the functions, and see whether the process enumerated for those functions have been followed. Typically, as Sundar very rightly pointed out, you will only have to answer one particular question which deals with advances in the long-form audit report, because none of the other things will be applicable to the branch. So, but if you start doing the audit without talking to the branch head and finding out what are all the process. For example, as Sundar said, in some banks, they also follow up. For example, these are the branches which collect the post-dated checks for housing loans, vehicle loans and all that. Or if a check bounces, whose responsibility? Is it the responsibility of the branch where the account is maintained, or is it the responsibility of the retail hub to follow up with the borrower and get the money? So these questions you need to prepare and find out the responsibility and functioning of the branch, and then go ahead and report it in law.
Yes, sir. The other questions are regarding the poultry farms outstanding since 600 days. The manager insists up to 900 days. It need to be repaid and classified as a standard. What is the IRAC norms are they prescribed for poultry loans?
For a poultry loan, the IRAC norms is the same as any other advance, which is non-agricultural advance, 90 days norm. I cannot understand why the manager says 900 if he has some circular from head office or RBI circular. Please ask him to share it with you. If it is the head office circular, I would love to see that circular because I would like to take it up with RBI as to why they are saying 900 days. If you look at page number 348 of ICAI guidance note in the PDF form or 334 in the printed form, it very clearly lists out the annexure 2 of the master circular IRAC norms, where poultry farming is not given as a facility for which crop season will apply, which means the normal 90-day norms will apply, and therefore there is no justification for the manager taking the stand. Whatever the due date, within that within 90 days of the due date, if any amount due in that account has not been received, please go ahead and classify it as NPA. Do not listen to the manager unless he is able to provide a circular, which again I would suggest is please go through the circular, see whether it is in consonance. Talk to the other fellow professionals who are doing similar kind of work for the same bank, and then take a final call.
Yes, sir. The next one, sir, the procedure for upgradation of NPA for a CC account.
Okay, a CC account is a very dynamic account. Unlike a term loan account, it's a dynamic account. It can the status can vary from a day to another day. Essentially, a CC account is marked as NPA if it has been if it is out of order for a period of 90 days. We need to understand what out of order is. If the account has been operated well above the sanction limit or drawing power, which is less for a continuous period of 90 days, then automatically the account becomes an NPA on the 91st day. To take an example, the sanction limit is 10 lakhs. DP is also about 10 lakhs, let us say 15 lakhs, which means up to 10 lakhs, the borrower can operate the account. If he has been operating the account above 10 lakhs, say between 10 lakhs to 11 lakhs, for a continuous period of 90 days, on the 91st day, the account will become an NPA. Now, on the 95th day, through genuine sources, money comes into the account. Automatically, the account will become a performing. It is not as if you do an upgradation manually. It can automatically become a performing. Now, there are other cases where it can become an NPA. For example, there are no credits at all. The second condition, first one was in excess of the sanction limit of drawing power. Second condition is it is operating well within the sanction limit, but there are no credits at all for the previous 90 days. Then also the account becomes an NPA. Now, that is the case where, again, just money coming in is not sufficient to upgrade it. Although the system will do that. The system, when it sees the money coming in, might do that. As auditors, we need to look at those accounts where there are no credits, or the third condition, where credits are not sufficient to service the interest debited during the previous 90 days. Those are cases which only you and me as auditors can actually pull out and mark them as NPA if they are marked as NPA. I have come across several cases in CC accounts where there are no credits at all, or there will be a credit on, let us say, the 20th of March, there will be a credit of X amount to bring it well within the limits. But on the 21st, exactly the same account, there's again a debit. They say wrong credit reversed. Now, unless you look at the narration there, you might miss it out and think that there was a credit. If it is a genuine source, then there is no problem. If it is wrong credit given, which is reversed, obviously the account will have to become an NPA. But for upgradation, it is only through genuine sources money should come in, and it should come in within the limit, then it can be upgraded.
Yes, sir. The next question, sir. What are the important documents need to be keep with us after the audit?
All documents, all your working papers.
Yes. Okay.
All certificates and reports, all certificates and financial statements signed by you along with the signature of the manager and other officials. You cannot afford to leave out anything. Even the correspondence that you exchange with the branch manager or the zonal office, whatever correspondence you exchange, I think all of them are part of your working papers. You will actually be making a mistake if you think that some of the documents can be destroyed. If you have taken, let us say, the CC account of a borrower for 6 months to analyze it, please keep that also. Because based on that only you come to the conclusion whether the account is an NPA or a performing account. So unless you have that, tomorrow if there is a query asked as to how did you classify the account as performing when it is actually non-performing, you will not be able to answer that question unless you have the account statement. So whatever the papers you have collected from the branch as part of your audit evidence, please keep them. Whatever letters you have given to the bank calling for information, please keep them. Keep everything proper, tag them, document, index them, have an index for it, and keep it safely for the next 7 years.
Right, sir. The next question, education loan with no collateral become NPA as on 20 December 21. Whether this loan be classified as substandard or loss asset? Sundararajan, sir.
See, education loan, which is becoming an NPA only on 22/12/2021, unless otherwise it is assured that it is never going to be recovered at all, then it need not be classified as a loss asset. Number one. Second option which is available is when there is an erosion of security beyond 90%, it has to be classified as a loss asset. Any asset, when there is an erosion of security, we'll have to classify it as a loss asset. I'm afraid whether this account can be considered as a loss asset. Probably Ramesh can add value in this. My point is, if, that is when there is a security which has been taken at the first stage at the time of sanction, and if it is eroded beyond 90% only, it will be considered as a loss asset. Otherwise, the first year of education loan can be considered as a substandard asset, in my opinion, and provided other justifications available. For example, in case of an education loan, it has become an NPA and they have tried to catch up with him and that party is not at all available. In that situation, if it has been decided that it is not going to be recovered at all, that is what is considered as a loss asset. Loss asset has been defined as an asset which has been identified by the bank or RBI auditors, branch auditors, or any other external agencies as loss asset, or an asset which is not at all recoverable, or there is no recoverability at all. So these three conditions has to be happening to consider an account as a loss asset. Erosion of security, people are getting confused between this and that. That's why I'm explaining this. Erosion of security is security at the time of giving a sanction. There is an amount which is available, which is getting eroded to the extent of 90%. At that time, you'll have to classify it as a loss asset. In my opinion, this education loan can be retained as substandard asset, provided all other parameters are not affected. Ramesh?
I think I completely agree with Sundar, except to add, just because an account there is no collateral, it's a loss asset. If that was the case, then they would never, the RBI would never have prescribed 15% provisioning for substandard assets, at the same time making it 25% for substandard assets where the security available is less than 10% of the sanction, of the original sanction limit. So after all, banks are allowed to give unsecured loans. And once an unsecured loan becomes an NPA, we don't immediately classify it as an NPA. Sundar was right in saying, if the chance of recovery is remote, for example, let's take a very, I won't say a hypothetical case. We came across this case in one of the branches where the student who had borrowed died in an accident. There is no collateral. The primary borrower was the student. There is no guarantee. In which case it becomes a loss because the chance of recovery is remote. That's the case when you need to go to a loss, otherwise it will only be a substandard.
In fact, adding to what Ramesh has said, this parliament has categorically said education loans can be given only without guarantee up to 5 lakhs. So when the government on one side is making it very categorical that up to 5 lakhs, the branches are not supposed to ask for a collateral security. In that situation, how can they give a secured loan for that? So the collateral security will not be there. So first year, it can be classified as substandard, provide other parameters. Sir, you are muted, sir. Chairman, you are muted.
Yes, sir. Regarding the gold loan, sir, the gold loan verification, we asked the branch to arrange the inspection item of ornaments and wait in the presence of gold appraiser, but the branch says it will only allow to inspect the sealed packets and they won't allow to open the seal by the gold appraiser and they won't allow us to inspect the items and they wait. What do you do in this situation? How to report?
Sir, as far as you are concerned, as a branch statute auditor is concerned, jewel loans need not be verified at all. That was the original stage. Now I was telling that samples has to be verified. This is our area. But the branch cannot come and dictate to us that you are not eligible for verification. This is our area. We can take a decision that this not be verified. If we insist on that, it cannot be verified. There is an element of fraudulent activity which is going to happen. I will tell you a classic example of a case not relating to bank audit, it is related to code of conduct. In an Andhra, one of the cooperative banks, there was a collusion between the appraiser and not in Hyderabad, not in Telangana, it is in Andhra. Appraiser and branch manager has colluded, and they have kept every loans as a bogus loans, and every jewels as bogus jewels, and they have never had the possibility of cross-verifying from the other appraiser. Unfortunately, the concurrent auditors have not verified that. The concurrent has been taken for code of conduct case. Why I am telling this particular situation is, when you are specifically given a direction that you will not be allowed to inspect the documents, it has to raise your antenna to confirm whether there is any possible lacuna is there in respect of your loans. Please, in that situation, you can verify the entire 2,000 loans also. There is no problem. But it is your prerogative. It is auditor's prerogative to go and verify each and every asset which is secured. But only thing is, due to time paucity, we are picking up sampling. So please be very, very clear that you are not be at any point prohibited. You can escalate the matter to the regional office. They will automatically run across to you, because if you say that in an internal financial control reporting, you make it very clear that this is not able to be verified, automatically everything is going as a risk. Because the gold loan, as far as gold loan is concerned, the risk weightage is actually lesser when compared with other loans. If that is going to be made as zero, automatically everything will become, they will run towards you and give you the help. Don't worry.
In case this zonal office doesn't come running as Sundar says and they are not able to do, please get this in writing from the branch manager.
Yeah, very important.
Put a letter in writing and get his objection saying that he will not allow it to verify. Put a disclaimer in every report of yours, in your audit report, in your internal control report, and have a special report on this sent confidentially to the central statutory auditors. It's not a report, more a letter by you from the central statutory auditor and also the head office of the bank, because the branch manager has no rights to say this.
Yes, sir. The
and
next question.
Sundar very rightly pointed out, the minute somebody says, I will not allow you to open the code packet, I as an auditor, after all, we are supposed to be skeptics. The amount of skepticism should increase manifold, and we should insist on opening it and getting it appraised by the appraiser of the next branch. That's what we should actually do.
Yes. Regarding the agricultural CC account, sir, there is only deposits and cash withdrawal on the same day. And excluding this, there is no credit to service the interest. Should be classified as NPA.
You will go to the crop seasons. That's all.
CC again on crop seasons. You go by crop.
Right.
We can skip it because time is running out. We can go to.
We answered till now, I think 15% only, sir. 80% still are pending.
Okay.
So then coming to the
I think
income
we have 2 more
recognition.
hours tomorrow on that day. Don't be
No,
over.
we can, no,
We'll
sir.
go.
After, I think after 1 hour, we will get the repeated question only.
Yeah, sure.
Yes, we can skip that one. Regarding this income recognition, sir, once it is account is NPA, CBS is automatically stop the income recognition, or can we manually pass the entry or through the MOC in the account?
Is already answered by Ramesh, automatically gets stopped only. But only thing, a word of caution is, in respect of assets identified as an NPA, interest unrecovered in respect of the earlier years, we have to pass the entry. Current year, automatically it will be stopping. But whatever be the interest in unrecovered in respect of the earlier years, also has to be reversed. RBI is very, very clear. Interest is not recognizable in respect of NPA for the current year, and whatever be the unrecovered interest in respect of the earlier years also has to be reversed. That reversal, we have to do it manually by way of an MOC only. Current year interest, they will be automatically provided in the CBS. If it is not done, we are supposed to give it, flag it as a system error.
Yeah, so next question is on LFAR. The question is, all advances is less than 10% or 10 crores. Can we mandatorily fill the account-wise details in LFAR?
There is no requirement. Once it is not a large advance, there is no requirement, because large advances, it's not happening in almost all the branches. Very few branches it can happen. In that situation, you don't require to fill it up. You can say as the annexure is not applicable.
Yeah. Next is on certification. Is it that the auditor have to sign ICOFAR, but that document is not available in login?
That's a question.
No, it is available in login.
No, it might not be available in the bank that he is auditing, Sundar. I think you need to take it up with this thing. If finally, even then it is not available, give a hard copy to the manager and obtain an acknowledgement.
That's all.
Yeah. So the next is on checklist. This is what is the question, but I'm not sure what does he mean by checklist.
He is asking for a checklist. As I already explained to you, go to www.casconline.org. There we have hosted some checklists. It may not be fully updated, but there are checklists that are available. You can download it.
Yeah. So next is on IRAC norms. The question is on Kisan credit. Maturity period is expired around 2020, but the loan amount outstanding is more than the sanction limit, but the asset is still shown as standard.
Okay, we can once again skip it because we have discussed a lot of about crop season, and go to the SLBC. SLBC, crop season. These are the two mantras which you have to understand as far as agri loans are concerned. Next.
Next is on reporting. I've been allotted the Bank of India to conduct the audit of regional business center, which deals with the sanction of advances of 43 branches in that region.
And this also we have answered already.
That the center has no advances, and also the balance sheet.
Naresh, we have answered this already, because on a different branch we have told about Canara Bank, RAH. Same thing is here, because we would like to ask fresh questions.
Correct. So LFAR need explanation. I think
long form audit report. If they have not understood this, I have to mention long form audit report.
Super. So next is an IRAC norms. OD limit is of 10 lakhs. Manager granted TOD of 2 lakhs for 90 days on 25th September 2021. The account was operated to nearly 12 lakhs even after TOD expired on 25th December. And on 28th December, 2 lakhs was given for a second time for a period of 90 days, which expired on 28th March. The account has outstanding limit near to 12 lakhs. Even
I know you love this. So please take this question. You love this particular topic.
The point is making it very, very clear that repeated overdraft giving is definitely a sensitive issue. First of all, this OD basic limit is 10 lakhs. The manager has given us a temporary overdraft. There are two issues attached to this. One is regarding this NPA classification, and this regarding the LFAR. Because in the LFAR, a new question has been added now. Repeated TOD is given by the branch manager. We are supposed to give a report separately, which was not the case earlier. Now we have to give a specific report. So please go through that particular question number 5 in respect of advances as far as LFAR is concerned. You have to mention. The second item is, once they give a TOD in 25th September 2021, which has not been cleared till 28th of December 2021, how can they give one more TOD? I don't know. First of all, the branch manager is misusing his powers. And whether the TOD has been reported to the controlling authorities is a second issue, because there are second issue of not not working within the powers of the branch, because we are supposed to mention there are two places where we are going to report that. One is the main report itself, whether the transaction done by the branch has been coming within the powers of the branch. This is one issue. Another important area is in respect of long form audit report. Have you observed any transactions which has been given by the branch beyond his powers? This looks very clearly beyond his powers only. First of all, 10 lakhs overdraft limit means he can give another overdraft TOD of another 10%, which is only 1 lakh. I don't know how he has given 2 lakhs itself. That itself is wrong. And if it is going to be a separate TOD and it is for which he has given some separate security, I presume if he has given separate security, which means there is an absolute wrong appraisal of his working capital eligibility itself. Once there is a wrong eligibility of a wrong calculation of working capital eligibility, it is going to become a doubtful or bad debts at some point of time. Let us be very, very clear. This is repeated. It's something like repeated restructuring we are discussing here. It is repeated giving of overdraft. This itself is eligible. In fact, one of the questions which is coming up future is red flagging. Repeated overdrafts are repeated in excess of drawing power itself is an account which is eligible for being considered as a red flag accounts. So this itself, this case is very categorical, which can be taken as a red flag account itself. So as far as IRAC norms is concerned, if I am going through this particular branch, I will directly classify it as the account as an NPA only and make it as a substandard, and also give sufficient report, scathing report in the long form audit report in all the places, including powers of the branch being exceeded beyond a limit.
So the next is on advances. How will DP be fixed for OD to civil or electrical contractor, since there will be no stock or debtors?
Yeah, once again, it depends on the sanction ticket, because sanction ticket, they will be giving the DP for calculation. They will be, it is not that it will not have debtors. Electrical contractors also will have debtors, but I don't know how the sanction happens, because particularly now this happens in case of MSME advances. These electrical contractors are also being eligible for classifying as MSMEs. In the MSMEs, they are giving overdraft without anything at all, without any stock, without any collaterality, without anything. They are giving up to 1 crore also, even in certain places. 75 lakhs they give in certain places. These cases, the drawing power will not be asked at all. In fact, there are some overdrafts against properties where the drawing power is not at all a question as it is. But we have to be very clear as far as long form audit is concerned, whether the review monitoring supervision is properly happening or not. Depends on the sanction ticket. Please go through the sanction ticket. It will say how the drawing power has to be fixed.
It seems to be more an assumption by the queries.
No, sir, it is not the assumption. It is not the assumption. Probably he's assuming the drawing power stipulation would not have been in the sanction ticket. That's why I'm telling you, in the sanction ticket, drawing power will be definitely calculated. If not compulsory, they would have mentioned very clearly.
Because the no sanction will be done if it is without the audited financial statements. So even looking at the audited financial statements.
The branch has sanctioned various term loans to same borrower with multiple GSTNs and multiple customer IDs for one GSTN. They created one customer ID, but all fall under same PAN. Now, one of the GSTN customer ID is marked as NPA. Can we ask the manager to mark other accounts as also as NPA since all fall under same PAN?
You don't have to ask. You pass MRC. Apart from that, there is an issue on somewhere earlier we were discussing about the KYC norms. Please understand this: creation of multiple IDs is dangerous. The branches somewhere they are playing with the system. The multiple IDs is not at all acceptable. There is a problem on the system itself. Internal control financial reporting also.
So the next one is also on that same category. It says one account is NPA, other account of same client not become NPA. Reason provided is the account which is NPA is closed. Other is active and yet to be closed.
I think there is a bit of a confusion in this question. Once an account had got marked as NPA, then on the same day, all other accounts would have got marked as an NPA. Just because the account which was marked originally as NPA has now been closed, doesn't mean that these accounts will become performing. There seems to be something else wrong. Please look at it. Because on the date on which the first account became NPA, the system would have automatically marked all of them as NPA if they had been into the common CAF. If not, again, as Sundar rightly pointed out, there are multiple IDs for the same account. Please look at that also. Otherwise, there's no doubt everything will be NPA.
The next question is on others. ATM cash difference is a routine process, and the reason provided that the machine is not working properly. The branch also has record of cash fraud prior period. The physical cash verification on surprise check found that one currency note was in excess than the record. Though it is not material, I found the controls of cash weak in many instances. After evacuation of cash from CDM, the counting was incorrect. We found out that there was been made rectification entries. Do I just make note of this in LFR or further steps required? In my opinion, just LFR comment is not sufficient after reviewing all details of cash in totality.
In my opinion, that is sufficient. Beyond that, we cannot do anything at all. For on 3-4 items. One is the quantum is not material. Number two, he's assuming that in many instances, we don't know what is a cash week in many instances which you're mentioning about. For example, if the dual control is not there. If the dual control, they have verified out of 300 days, dual control is not done in case of 200. It is a serious problem. It is a serious problem. I don't know what is the cash weakness, that is control weakness, which is found in many instances, which I am not able to examine. But after excavation of cash and AD and CDM also, the counting was incorrect. This happens. Few items this say and that side it happens because we ourselves, but that difference, they would have kept a suspense. If it is excess, they would have kept under Sunday deposit. If it is shortage, they would have kept under suspense. Then they will try to find out by way of reconciliation. What happens is in very many places, the cash drawn by the customer would have gone excess also. For example, if I am going to draw an amount of 5,000 rupees, there is every possibility that 11 notes of 500 rupees can come. That can fall as a short in the particular. There is a technical issue which can happen. They have to examine whether it happens regularly. It has to be seen. What is the repetition? All these things has to be examined. If these examination does not create a big problem, in my opinion, LFR comment is sufficient and it may not be going beyond that. Of course, once again, you can have the concurrent auditor's viewpoint. We has been reporting in the ATM. Now in the LFR, NTM verification is also to be reported. Previously, it was not the case. So to that extent, you have a responsibility. Please verify and confirm according to the requirements.
So next one is on IRAC norms. Whether bank can sanction housing loan against agriculture income with 2-year moratorium period and yearly installments. If yes, please provide RBI circular. And as per RBI norms, IRAC norms, when account will be classified as NPA. If no, what is the minimum moratorium period and minimum installments period as per RBI guidelines, and how to classify the loan as NPA and how to qualify the same in my report.
A housing loan can be granted against agricultural income. There is no bar. An agricultural housing loan to be granted, the bank only has to verify whether he has the means to repay the loan. There is no guidelines prescribed by RBI or directions given by RBI as to what should be the moratorium period, what should be the repayment period, how should you fix the repayment, whether it should be monthly, quarterly, half-yearly. They have left it to individual banks to come up with their own. So they have in fact stated that the board should have a policy as far as the residential housing loans are concerned. I would advise the queries to look at the policy of that particular bank, look at what they allow. And as far as the IRAC norms is concerned, 90 days norms will apply. Although it is against agricultural income, this does not come under Annex 2 of the IRAC Master Circular, and therefore this will be there only with the 90-day norms. If from the due date, which has been fixed by the sanction letter, money has not come in within 90 days, it will have to be classified as a NPA. Whether 2-year moratorium can be given, I think that will depend on the policy of each branch, because no specific directions have been given by RBI to state what should be the maximum moratorium period and things like that.
The only clarification here is loan given to an agriculturalist is not agriculture is covered for crop seasons. Let us be very, very clear. Any loan given to an agriculturalist is not coming under crop seasons. A loan given for the purpose of agriculture is eligible for beneficial treatment of crop seasons.
Again, on IRAC norms, whether agriculture loan with yearly repayment can be refaced. Is there any circular from RBI for refacement of agriculture loan with yearly installments and such situations where the account will become NPA?
See, by refacement, I presume that he's talking about restructuring. Any account can be restructured, including an agricultural loan, agriculture account. Only thing is, once an account is restructured, it must be downgraded from the position, from the status in which it is. Provided that there are no circulars saying you can downgrade, you can restructure without downgradation. As long as the beneficiary circular is not applicable, is not available for that particular loan, or sometimes before COVID, you found that there are no circulars giving special concession at all. So in such a situation, it has to be downgraded. Otherwise, There is no reason why it should not be restructured.
The point is, he was talking about agriculture loans. Once again, where there is natural calamities, that particular sector.
For natural calamities, the state level banking committee will come into play. They will decide on what is this thing. So please be guided with it. In fact, I can, if you give me a minute, I'll tell you what that circular is, when that circular was issued for natural calamities. Just give me a minute and I will tell you the circular reference. RBI circular dated July 1, 2015, FIDD, number is 2015-16. So if you look at that, that circular talks about natural calamities impair the repaying capacity of agricultural borrowers. Banks may decide on their own as a relief measure conversion of short-term production loans into term loan or rescheduling of the repayment period and the sanctioning of fresh term loans subject to guidelines contained in that particular circular dated July 1, 2015. So if it is done by that, if SLBC has declared a particular district as a drought prone or a flood affected area, these things can be done. So please look at the SLBC circular, look at this circular and then decide.
So next one is on advances. Limit of 20 lakhs given on August 21. Nil credit during the 21-22. Only limit availed. On 31 December 21, RTGS of 5 lakhs sent to A. On 6th January 22, RTGS received from A is 5 lakhs. No other credit in account. Is it NPA account? Also covered under quick mortality.
Solitary and few credits. Ramesh, are you picking up the phone? Are you picking the question?
I'm only concerned about one thing. He has bestowed one vital fact. He says limit of 20 lakhs was given, but was it utilized?
Yeah, he has said only limit is available. He has put.
Only limit is 5 lakhs.
Credit, only limit is available.
No issue. There is
limit is available, no? Limit is available. On 30th, limit is available, sir. So he has utilized the amount, utilized the 20 lakhs. He gave one check to RTGS on 30. Oh, if that 5 lakhs is the first check given, there is no problem.
Exactly.
But so only limit is available. There is no drawing at all. In that, neither drawing nor credit, no issues. Okay. On 30th December 2021, he has given a check of 5 lakhs. On 6/1/2020, he has received it. There is no problem at all. Where is the question of classification of NPA? Because once it is 5 lakh debit and 5 lakh credit, there is nothing as balance zero. Even if you classify it as NPA, what will you make a provision? Zero? Question is not fully right.
Because he said only limit is available on 30th December. Which means nothing else has been available. Absolutely for a fine account. There's no need to classify. In fact, it's a zero account.
No. The point is, if it is only limit is availed, means limit of 20 lakhs, so given on August 21, and only limit is availed. Which means if I take that is there is a full stop. There is a full stop. I presume if that full stop is there, he has availed means he has utilized that amount of 20 lakhs. After that, he has given back. If that the full stop is made as comma, then the answer is different.
Sundar, if the only limit has been availed in August 2021, then even by December it should have become NPA.
Correct.
Because August, I don't know the date, but like if it is the first week of August, September, October, November itself, it will become an NPA because there are no credits at all in the account.
Correct.
So I am assuming that is a full stop and the only transaction these two. Either day, there is no issue. One day, the entire loan.
Okay.
So next one is on LFAR. For reporting an LFAR, 2 large advances or 10 crores amount is to be calculated considering only fund-based outstanding or both funds.
It consists both fund-based and non-fund-based. It's very, very clear as far as our LFAR is concerned. For identifying the large advances, we have to consider as 10% or 10 crores, whichever is lower in respect of combining both fund-based and non-fund-based advances. So
next is on others. Whether renovation expenses of 7 lakhs incurred by a branch is revenue or capital expenditure. The details of expenditure is pop ceiling worth of 2 lakhs, replacement cabinets, 3 lakhs of furniture, fixation of wall panel. No wall panel was there before, electrical works, MCB, etc.
I think you need to look at the accounting policy of the bank. Please go through the accounting policy and then decide whether it's a capital expenditure or revenue expenditure. Sit here and bank. It's very difficult for us to answer this question.
There's a question of section 37 of Income Tax Act. We are getting diverted.
So next one is on Iraq. Case gone to NCLT. CIRP initiated a resolution plan approved by COC. out of 24 crores, bank is getting 5 crores. NCLT order approved resolution plan is yet to come. Question is, under what classification is 5 crores outstanding to be shown, secured or unsecured?
Secured only, because once it has gone to NCLT, see, there are two possibilities in this matter. We'll have to go to the NCLT rules also. Once an item is going to NCLT, NCLT gives an option to the bankers. You want to come into the system or you want to stand alone as a secured creditor. If the bank says that I am having the security, I will stand as a secured creditor, the loans will be continued to be shown as secured creditor. But from this, I understand he has offered the security to the CIR people and have given it as resolution plan, you do it. In that situation, the item would have become unsecured only because he does not have the hold on the security at all. I'm making it very, very clear. It depends on the NCL, the entire resolution plan. The resolution plan, it gives an offer to the creditors, including the bankers, either to opt for being secured creditor and stand out of resolution process. If you want to come into the resolution process, you have to come into put all your securities into the common pool. In that situation, what the bank does not have any security at all, because all the rights of the security gets passed on to the resolution professional and he does not have the power. This is what my point is. Ramesh, you have any idea?
No, in fact, my understanding of the question is the outstanding to the bank is 25 crores, out of which the bank is going to get 5 crores from NCLT.
No,
No. It's a slightly different, sir. The point is the total outstanding is 25 crores. They are going to get only 5 crores. In fact, the balance 20 crores, I will have to make a provision itself.
Exactly. No.
That is, I know. He was asking about whether it is classified as secured or unsecured. I make it as unsecured only. Provision, whether we have to make for the amount of 20 crores, that's the second issue as far as NPA is concerned. The first portion is secured, unsecured. I'm making it very clear it's unsecured only because you have put your common, it has gone into the common hotpot of the NCLT. That is your property. You are waiving the right of being a secured creditor by forming part of the resolution. If you want to ensure that your security is being with you, you have to stand out of the resolution. That's what my point is.
Now, if you look at this question further, 25 crores is outstanding. They are going to get only 5 crores from NCLT, which means there is an erosion of the value of security. Only 20% is going to be available. Therefore, it is the erosion of the value of security by more than 50%. You naturally will be marked as an NPA. It will have to become doubtful.
I am making provision also. Balance 80 return, the 20 lakhs has to be made as provision.
Next one is on LFR, as we discussed same point last time also. So I think they need to go detail. Next one is on reports. Audit allocated branch is subjected to ICAI for audit. We have done test checks and for the RCM of the branch, we have prepared independent audit report with annexure A as per the ICAI guidelines note. My query is, do we need to report anywhere else regarding the test results or the test samples?
Your test results and test samples are your working papers. Based on that, you have given a report. You don't have to report about what process you did or what techniques you adopted. You just have to preserve them as part of your working papers, not to be no need to report it anywhere. In fact, I would go to the extent saying not to be reported anywhere because your working papers which will come to your defense if the question is asked about your report.
Right. So next one is on advances. We observed that the gold loan branch is not obtaining any KYC documents. Please guide us the importance of this.
As I already explained to you, KYC norms is a very, very critical item today, particularly in view of the PMLA and other anti-money laundering activities which are happening. Please insist that KYC norms are there. Without that, the bankers are also not taking that sort of risk nowadays. If it is happening, please report it widely in the long-form audit report, both in the level of advances where we are supposed to mention about the party's name is not at all known, and there is an element where the KYC norms has to be specifically reported as per the new format of the LFAR. There also you make it very, very clear. This is very, very important. I don't have to explain about this importance beyond a level because there is a banking fraud which is happening in respect of all the assets. The jewel is the worst scenario situation wherein people are misusing. Without KYC, I come and give some bogus gold and take the money and go away. Where will you go and pick up the people? It is absolutely not possible. And moreover, even in other situation, people who doesn't have huge gold deposit, they come and give it as give it to the banker and take a small loan and go away. It will be available very much in the security. That is not the issue. The point is Whether the KYC norms are compulsory or not, it is compulsory only. Without obtaining that, it is happening. It's a serious problem. We have to report in all the places.
Next one again is on advances. Sorry, in one of the banks, the partnership firm has borrowed loan and classified as NPA. Whether partners' individual loan accounts also need to be classified as NPA.
No, I don't think it will happen because it is on the basis of borrower wise. Borrower wise. The company is a firm is a separate borrower, individual is a separate borrower. Unless and otherwise there are some common securities available and common collateral, all these things are there. Otherwise, it need not be classified as an NPA. It can be kept as a separate one, provided the other account is performing. Ramesh, is there any
No,
change?
I completely agree with you on that. Nothing to add.
Okay, right.
So the next question is on advances. While reviewing a SOD account, notice the following issues. Accounts due for renewal on 29 January 21, short review made by branch on 27/21. Notice a document named sanctioned advised on 10/3/22. Not a letter of sanction. There is no signature found as well. Since it was not a final sanction, the bank team did not update the renewal information before 31st March 22. They have updated the renewal on 6/4/22 in Finacle after 31 March 22 while the audit is going on. Query is whether the sanction advice mentioned point 3 can be considered as a sanction letter. If yes, there is a gap of more than 180 days between the date of short review and the date of sanction. Do we need to classify it as NPA and then upgrade it again? What are the steps needed to be followed?
The queries himself has stated that that is not even a signed letter. There is no signature. How can that be treated as a sanction letter? It became due on 21/2021 and not renewed within a period of 180 days. That is the date on which it has become an NPA. Please mark it as an NPA on that date. Do not say because it has been sanctioned, because the regular sanction has come after March 22, it becomes performing again. That upgradation can happen only next year. As on 31st March, it is an NPA account and the NPA date is 180 days from 29/1/2021. Do not take events occurring after balance sheet date and classify the account as performing because RBI says you must do the status as on that day.
And see, you were telling about one more circular, no, Ramesh, whether short review, long review, whatever it is, all put together, it is maximum 180 days.
It is there in the
RBI is very categorical.
It is there in the master circular. It is again there in the clarification in November 2020.
Number 2, correct. Number 2, they have given a specific clarification. People are misusing this provision. So, in the short or long review, all put together is only 180 days maximum. November 21, the circular is there. You can go through that.
I actually love this query. It's given all the points.
So next one is again on advances. FITL sanctioned during 2019 was restructured based on RBI circular dated 5th May 21. SBI released e-circular supporting FITL can be restructured up to 2 years. However, circular dated 27 March 20, all FITL granted as COVID regulatory package shall be closed by 31st March 21. If they are restructured, shall such FITL be marked as NPA? Second point, I suppose, during 2021 June, whether fresh FITL eligible?
I think this is what I started off with. We started the session with me talking about these 3 circulars: August 2020 circular, May 2021 circular, and the COVID-19 package. Now, I think the query is a little confused. The 27 March 2020 circular spoke about interest accrued interest accrued from March to August 2020 to be converted into FITL, which should be paid out before 31st of March 2021. Now that is over, gone away. Now they have restructured the account and created an FITL as per the 5th May 2021. All that the queries need to see is whether all the conditions stated in the 5th May 2021 circular has been complied with before restructuring. If that is done, then there is no issue here at all. But even if one of the conditions has not been satisfied, it could be as simple as the date of implementation of the restructuring process. Within 90 days from the date on which the invocation happened, it should have been completed. If it had been completed on the 100th day, then also the concession should be denied because RBI says that timelines have to be strictly adhered to. If not, there is no issue. It is a restructured account. which does not call for a downgradation of the asset.
Next is on IRAC. Sir, please clarify whether FITL granted a COVID relief package in 20, restructured during 21-22, based on May 5th, 21 circular, and whether new FITL allowed during the period 21-22.
Same question. It's the same thing. So,
yeah. So next is on reports. Whether tax audit report is mandatory or not.
Depends on the bank. If the bank has asked you to do the tax audit, you need to do it.
Otherwise, don't do it.
Advances question. Whether SHG and gold loans, cattle and allied activities still classified as agriculture, as RBI restructured agriculture loan to Annex 2. However, 90 days norm applicable, but rate of interest charged and head.
We already discussed, sir. It is non-agricultural concept only. You will have to skip it. It is already discussed.
No, but I think he's asking the interest is done at agricultural loan. I think it's perfectly all right. Only for the purpose of classification, they say 90 days. Otherwise, it is considered as agricultural loan for the purpose of interest application.
Interest.
Next is on reports. An SBI audit. What are CCDP reports? If NPA list, the loan balance file have wrong classification and CCDP has correct classification, do we need to give MOC?
CCDP is basically a CC drawing power report, sir. This is for the purpose of determining the drawing power. If the drawing power is having an X amount, and at the time of classification, only from here it will catch up, because the classification items, that the NPA classification does not come other than from the same report. I don't know how it is going to be different. If at all it is different, we have to necessarily find out how this is becoming different, because CCDP is from the same CBS. From that only, once there is a drawing power is there, and the balance outstanding is beyond drawing power, it will show irregularity. And if the irregularity is more than 90 days, automatically it will classify it as NPA. This is how the system happens. There cannot be difference between these two items. If there is difference, we have to examine. But when you have to give an MOC is, once there is a classification error, if the classification is wrong, you will have to give an MOC. You don't have an option. CCDP is an indicator for determining what is the irregularity. Once irregularity is there, if the irregularity is for more than 90 days, then it becomes an NPA. That's all.
Next one is on IRAC norms. In case of NPA account, if valuation report of immobile property not older than 3 years is not available, what value should be considered for the purpose of provision?
Yeah, once it's an NPA over 3 years, automatically it will come under D3. Once it is D3, whether security is available or not, it is going to be provided 100%. Why do we have to bother about whether report is there or not? As far as NPA accounts is concerned, for more than 3 years, valuation has to be done. There is a separate reporting as far as LFAR is concerned, whether the asset mortgage to bank in respect of NPA assets is being valued every 3 years or not. That's a separate question, you answer it. But for the purpose of NPA classification, you don't have to bother at all. Straight away classify it as D3. Once it is D3, obviously you don't have to bother about valuation at all, because 100% is going to be provided for. Next question out of syllabus. Go to the next question.
Chairman is not there. He can answer the question.
Yeah. So next is, sir, we have found some advances, agriculture term loans, which have been taken before 2017, but repaid only interest charged up to 31st March.
Skip it, sir. It is on crop season, SLBC. They have to go according to the crop season SLBC. We have already explained. If the query is there, already you would have listened it.
Correct. Next is on IRAC, whether reverse mortgage loan should be classified as NPA when limit is expired after loan period and no extension of loan is made. Bank branch people say such loan will not be classified as NPA since the loan are not having any repayment obligations. Kindly advise.
I don't have a first-hand information. Ramesh, you have anything?
In my opinion, I think what the bank is saying is right, because reverse mortgage loan, there is no repayment schedule.
Repayment at all, correct.
I don't think that you can classify it as an NPA. But if there is anything if there is any
and there's no question of limit expiry also, sir. In those cases, there's no limit expiry also.
It's only a term loan.
Term loan.
Question of thing.
Limit expiry will not happen.
It's only in a working capital loan, it has to be
probably it's a hypothetical situation. It will not happen.
Yeah. So next is on others.
Right.
What are the exceptional points in audit program of audit of asset reconstruction and management branches?
In an asset restructuring and management bank, what you need to look at exceptional point in audit program is look at the valuation. The valuation report, whether they are right. 1, 2, if there are any instructions from the controlling authority to go to NCLT or file a case, whether that has been done properly. 3, if the case has already been decided and as a decree been obtained, has it been implemented so that you can get out of the property. The most important thing is valuation and the exact provisioning made based on the date of entry. Otherwise, there is nothing specific, nothing very special about the ARB branch.
In the ARC branches, this particular item has been added now. Whether controlling authorities have suggested to go for an IBC. In that situation, we have to report whether it has gone into IBC. This is one side of it. Second side of it, one more question is there. Wherever somebody else has gone on IBC, whether this bank's eligibility liability has been added in the claim or not. These two questions are additional in the long format report for reporting that. Please ensure, because all the asset recovery branch cases, this will happen.
Next one is on IRAC. Sir, in case of CCOD, staff festival loan with nil balance or negative balance outstanding, direct there is no change even when the limit expiry date exceeded long back. Will action need to be or can we ignore as there are no pending and low pending considering materiality?
What does he mean by
staff festival
balance? I mean, if there's no balance, I can understand. What do you mean? What does he mean by negative balance?
Basically, staff loans will be adjusted to salary.
And staff festival loans, there is no interest also being charged. It will be recovered in 10 months. Every year it will be given, it will be recovered in 10 months. It is not even considered as loans and advances, if I remember right.
Yeah, it is not. It comes under suspense only.
Festival advance is not even considered as loans and advances.
Next is on IRAC. The branch has restructured large number of advances and upgraded to standard category. However, all the conditions laid down and the notification has not been complied with, and no documents are kept for documents so as to upgrade, including application from borrower. Can this be a roll back to NPA?
Please go ahead.
And apply provisions.
Please go ahead and make the provision, which has already been explained. We have to have the necessary papers supporting the requirement of the restructuring. If it is not there, please classify it as non-performing asset and run away from the branch. That's all.
Again on IRAC, sir, in calculating grace period, are we supposed to consider 3 months normal grace period, IRAC norms, plus 6 months COVID grace period to arrive at the performing asset or non-performing asset judgment?
The COVID-19 did not give any grace period. They deferred the dues from March 2020 to August 2020. In effect, they pushed the last payment date from, let us say, if the last payment was due sometime in June 2027, then it got pushed by 6 months. That is all the effect. But as far as classification NPA is concerned, 90-day norm is what will apply, nothing more. So if by 31st of whatever amount due to the bank in a term loan account as on 31st of December 2021 has not been received by 31st March 2022, the account will have to be classified as an NPA.
Yeah, next one is out of
Once again out of syllabus. Go to the next question.
Advances. What are the large advances at a branch?
Already explained. 10%, not 1%.
Next one, others. LC is issued for 1 year. LC is issued for 1 year and expired on September 22. Whether bank have to book commission on LC proportionately, that is to transfer proportionate commission from April to September book as asset and only remain recognized as income of the year.
Again, I think you need to look at the accounting policy of the bank. Some of the banks have started accounting for the entire commission on the day it is received, but most banks, to my knowledge, have what is called an unexpired commission account. So where automatically it is transferred at the end of the year. So please look at whether there is an account called unexpired commission account in the balance sheet where it is shown as a liability and will be taken to income in the next year. So when you looked at the income account on the day on which it is issued, it will be taken to income account. But on the last day when the year-end process run, a portion of it will be taken to unexpired commission account.
Next one is an advances. Term loan sanctioned but not fully disbursed. EM fixed as per original sanction amount. Now, what the borrower should pay. His request is for refixing of EMI on the basis of actual amount disbursed is pending with the bank. What as an auditor I should do? Meanwhile, the borrower has paid some amount on ad hoc basis and that amount is less than the amount of EMI originally fixed.
You want to take this question? Unfortunately, if the sanction ticket says, as said the EMI account, although you know that it is wrong, and an auditor, there is nothing much you can do about it. If it is up to the bank to have taken the right stand, heeded to the advisor request of the borrower and refix the EMI. The fact that they have not done it, they may have their own reasons. We don't know what the reasons are. They have not done it. As an auditor, I am only guided with the sanction letter. Maybe the borrower, has given a letter now. He agreed to the original EMI. We don't know what transpired. As far as I am concerned, I would only go by what the sanction letter says. If the sanction letter says one EMI and that has not been received, I think I will classify it as NPA. Having said that, if I think that I need to exercise all my professional capabilities, I would probably ask the branch to work out what is the EMI as per the revised terms. That is the amount disbursed, not the amount sanctioned. And I will not work that out. I will ask the branch to work it out and give it to me in a letter to me. Based on that, if I take a look at it and taking a management representative letter that we made a mistake, what is entered in the system is wrong. This is what it should be. If the letter of representation is available, I might leave out the account from being classified as NPA.
Yeah, the next one is again on advances. A CC advance without any genuine credit from customer more than 180 days is made non-NPA by transferring interest amount first from a CC to SB for a same customer before year end by banker and then subsequently from SB to CC itself on same day. This case is a fit for considering as NPA, taking substance over form. Am I correct? I think it should be the reverse, isn't it?
The basic question is it has to be from SB to CC and then CC to SB. Whether it is there or not, more than 180 days. After 91st day itself, it would have become an NPA. Why do you have to wait for 180 days matter? So basically, it has to be classified as NPA only. He is 100% right, irrespective of the confusion in between the question.
Next is on advances. What exactly is made a red flag account? Is it a subjective term or the judgment of each of the auditor?
Well, a red flag account is one where it is, it is susceptible to fraud. An account which is susceptible to fraud should be marked as a red flag account. There is the RBI circular on this issued by RBI. They have listed out early warning signals. Almost about 30 situations have been given which are indicative of early warning signals of a fraud. Please look at that circular. It is not subjective. It is completely driven by situations. The illustrations have been given RBI. Having said that, RBI has also given powers to the bank to make to add situations to those early warning signals and have their own policy on how to report it. But the fact remains, a red flagging of an account is an account which is susceptible to fraud in a loan account. And therefore, I think one needs to look at that very clearly before answering any question with regard to this. Ask the branch whether they have a policy. If the branch is unaware of any policy like that, in the long form audit report, I would say that the branch is not aware of any red flagging and they are not able to produce any report to me as far as red flagging of an account is concerned. Just don't go by the reply given by the branch when I is saying, sir, all that is looked after by head office. There is a question asked in the long form audit reported pertaining to your branch, reply that with the answers given by them.
So next one is on
In fact, one of the earlier questions, I would ask the members to recollect the particular point. In one of the earlier questions, when there is a repeated overdraft or excess overdraft continuously, that itself is one of the signals. In the 32 items which has been given by Reserve Bank of India, one of the items is frequent overdrawings without proper approvals. Itself is a item which is EWS, which can end up in fraud and ultimately it can be a red flagging of account also.
So the next one is on cash administration cell. Profit and loss account figures appearing as commission on other transactions, miscellaneous income, interest paid on savings account. Similarly, in YSA, following figures were appearing: savings account, saving bank interest accrued in liabilities, core interest bank account and assets. Being a cash administration cell, in my opinion, no figures of income or deposits or advances should appear in P&L and YSA. Whether a MOC has to be issued in this regard at a branch, and if yes, then how to report in MOC?
I think while I agree with the part of the question saying that there should not be this account, the fact that they are there, it is not from from thin air that they have taken and put it there. Obviously, the GL contains these heads. So if the GL contains the head, ask for why they're still up pending there. What is the reason for their savings bank deposits to be there? Maybe they are the savings bank deposits of all the employees of that branch being maintained at that branch.
Correct.
And therefore, I don't think you can come to the conclusion that you need to pass an MOC. Because these are not coming from thin air. They are coming from the GL of that branch. Although they should not have any deposits or advances, they do have. It is coming from the books of the branch. So how can you pass an MOC saying all of them should be made zero? I don't think that is possible at all.
So if at all there is a question like this, if it is coming from a thin air, it cannot come from a thin air. The opposite effect will be there. If it is a debit, there will be an opposite effect in the sundry deposits. Same thing it will be available in case of suspense. So there you will have to ask the same question, how it is happening there. Accordingly, examine that analysis and then pass the entry if it is required. Because if it is clearly mentioned that it is not applicable to this particular branch. But without concluding on the actual data, you cannot go for an MOC straight away.
In fact, the query says there should be, in his opinion, there should be no figures of income. Why not?
Why not?
The cash administration cell does get income where they're handling cash. So for the branches of the zonal office where they're handling cash, they do receive a commission for that. It might be a transfer entry. They might not receive it exactly, but that is a transfer entry which accounts for their income. So there's nothing wrong in these things being in the balance sheet or the financial statements of that branch.
So the next question is on advances. Post restructuring of agriculture short-term loan, can interest portion be capitalized, due to which 200% of principal amount is outstanding and continuing as standard?
I mean, talking about a crop loan where the interest accrued has not been paid and has been converted into a funded interest term loan. I don't know. I'm not very sure whether that can be done in restructuring of an agricultural loan. But if it is if you have seen the circular where it is allowed, then I think you do it. I'm not sure about restructuring of an agricultural loan. I'm not able to answer this question. But if it is a normal loan, yes, the accrued interest can be done, and whatever percentage it forms of that is of no consequence. I'm assuming that the agricultural short-term loan interest also has been capitalized and converted into funded interest term loan. I'm not sure whether it can be done. I can only guess that it can be done, but I won't answer it with 100% authority.
Yeah, so next is on IRAC. Auto NPA marking system lapses. Sample cases of wrong classification can we report. Disclaimer in report. Structure COVID-2. No request like documentation at branch advises. Education and housing loan for employed persons in restructure without stress. Please advise report and classification of all cases or test check sample.
As far as the first one is concerned about NPA making system lapses, Sundar, I think, actually explained this in detail in one of the queries. Coming to the second one, where is the COVID 2.0, where they have given restructuring without any documentation, I think you have every right to say that those accounts should be downgraded. Because RBI again says there must be evidence of stress and all other things prescribed in that circular should be available. If it is not available, you are well within your rights to ask them to downgrade. If they don't do it, please pass an MOC with very valid reasons and complete documentation as to why you are saying this.
Next one is a bit out of syllabus.
Out of syllabus, yes. I will only add one thing, Naresh, although it is out of syllabus, as somebody who has been in practice for 40 years, I think I can afford to say this. If you think that there are constraints of allotment date and finalization, and you have to look at so many standards through the audit and time is not sufficient, please do not accept the assignment. Having accepted the assignment, do not complain. You have to finish it to the best of your ability. You knew very well, even at the time of accepting the assignment, that you are only 8 working days or 10 working days or 12 working days. If you thought you can't do a good job, or if you think you cannot do a job which the way it should be done, do not accept it. There is no other way, no point in complaining.
Yeah, so I think the last question. PM Samvaditi loans, street vendor finances were classified as secured as per loan documentation. Hypothecation of stock in trade and book debts. And there's nil collateral as per circular of the bank. However, there is no confirmation or records of such hypothecation as the loans were under PM policy. How to classify or mention audit observation as insufficient documentation for loans and advances?
Is there a DP at least? A demand promissory note? They don't have an hypothecation, there is no other documentation. Is there a demand promissory note available for these loans? Even if that is not available, I would suspect whether there is actually loans granted at all. I would dig deeper into seeing what are the kind of loans that the branch has given. But if a DP is available and hypothecation is not available, I think as an auditor, I would classify them as unsecured because there is no hypothecation deed. In the absence of those documents, how will I classify them as secured? There's no way we can do that. But if DP itself is not available, it calls for a serious...
No, hypothecation document is there, Ramesh. They are saying hypothecation document is there, but there is no confirmation records of such hypothecation. What he has said is, while classified as secured as per the loan documentation, hypothecation of stock in book debts.
Okay.
Unquote, as per the circular of the bank. But however, there is no confirmation of records of such hypothecation.
No,
That is
confirmation or records of such hypothecation. It is not
confirmation or okay.
Or.
So he says hypothecation document is not available.
Then in that situation, yeah, you are right. You are right. We'll have to go at least for the DPN. If the DPN itself is not there, see the SHG group and PMG group, all these things, there is a documentation which is happening in respect of a larger group. I don't know about this particular scheme, statement of finances or whatever it is. Without KYC, without DPN, no loan is being given by any branches. If that is happening, it's a serious error on the point of the branches. We can definitely give it as a serious remark.
I think all the questions are answered. I'm sure all the members are satisfied with the replies given.
No, there are some questions available in the chat form.
Okay.
Because kindly send the questions. OD limit sanction based on the turnover without any primary security. And having, I am seeing the chat, OD limits sanctioned based on turnover without any primary security and having collateral coverage of 200%. There is a minimal transaction only in the accounts for the last 3 years, and the branch has not obtained FS GST return to ascertain the DP, but extending the original DP, it should be treated as an NPA right. See, I would like to mention about this particular system of loan. As far as certain banks are concerned, they are giving on OD against property. OD against property, the drawing power itself is dependent on the property valuation only. For example, if there is a property of 2 crores, they give a limit of 1.2 crores, 60% of the property value. Taking the stock statement and debt statement is one an annual feature, but just for ensuring the monitoring. They will not be bothered about the drawing power because the drawing power is determined on the basis of the security which is being given by way of a collateral security. If that scheme is there, let it be very specific. Let me be very, very specific. If the loan is given by way of an OD against property without linking in respect of a stock or book debts, in those cases, they can continue to keep the same drawing power because the drawing power is fixed as a 60% of the security value. In that situation, you don't have to classify it as an NPA at all. If it is otherwise, OD is given on the basis of the stock and debtors, but the property is taken as a collateral security. In that situation, you can definitely classify it as non-performing asset. Sir, you are able to see my question. I don't know. Pola Ramakrishna, what was the question? I don't know. Bank has given agri loan in May 2020, and however, no interest is recovered till date. However, the loan tenure is only 1 year. Gold agri loan is not 1 year normally, it is 2 years loan. So May 2020 means 2 years will be applicable more 2022. Even otherwise, if May 2021 only, they will be eligible for 2 crop seasons. So this year, it will not be considering as an NPA. So as far as gold agri loan is concerned, normally it is for 2 years. You don't have to bother. That's all.
This is internal, yeah.
I don't see anything else.
Yeah.
There are some other questions.
They're all answered.
They're answered. Okay, please reverse mortgage. Yeah, reverse mortgage will be correct.
So it was a wonderful session, sir. Thank you very much for participating actively and interacting and sharing your rich knowledge and clarifying all the doubts of members which have been raised through Google form. I would also like to thank all the members who have taken pain in writing all the questions during the audit and participating in this session. So thank you, Sundararajan sir, thank you, Ramesh sir, and thanks to all the members who are participated in this Q&A session of Bank Audit. I think this is the one of the years where we had almost 6 to 8 sessions on Bank Audit, and we had a lot of discussions, deliberations on Bank Audit. I'm trying to list out all the YouTube links which have been there for all the 8 sessions that have happened. Probably tomorrow or day after, I'll again circulate to all the members all the YouTube links of all the sessions we had during the month of March. So thank you, sir, and all the best for both of you and all the members doing the Bank Audit. for this term 2022. Thank you very much.
Thank you, Naresh.
Thank you.
Thank you.
Pleasure being here. Thank you.